In this video, let's look into why Starbucks is struggling in South Africa for a very long time. The first Starbucks in sub-Saharan Africa opened in 2016 through a partnership between Starbucks and South Africa's Taste Holdings. Starbucks gained a foothold in South Africa in 2010 when it licensed its drinks for sale locally in parallel with the Republic's hosting the FIFA World Cup. 4 years ago, the company announced that it would partner with Taste to build a standalone store in Johannesburg that became the first Starbucks location in sub Saharan Africa. The vibrant and growing coffee market in the country was the prime driving factor for Starbucks to foray into the South African market. Besides, the coffee consumption was gradually showing an increased trend among the middle and upper income consumers. In addition to coffee and snacks, Starbucks store also offered cyber office space, free Wi-Fi, local beverages, and comfortable space to both relax and read. Starbucks' entry would not only create employment opportunities in the country but also help in imparting skills to the workers in the South African market. However, the social media sites were casting doubts regarding the success of the company in the region. Even popular international brands like Zara, Burger King, McDonald's, etc., were struggling to recalibrate their success in the country due to South Africa's typical market structure. Besides, Mug and Bean, the local coffee house brand, might also throw stiff competition to Starbucks in South Africa. The partnership between Taste Holdings and Starbucks ended in November 2019 when Taste sold all 13 of its Starbucks stores for 7 million rands or about $464,000 to a consortium. In November 2018, after opening 12 Starbucks in South Africa, Taste said it would pause the rollout of new stores. It presented investors with a plan to continue expanding Starbucks to between 150 and 200 locations. However, in its November 2019 statement, Taste said it could not secure the capital investment required for that expansion due to the current structure of the business and existing market conditions. Taste, which also owns Domino's Pizza franchises in South Africa, said it would exit the food business entirely. Instead, Taste said it would focus on its luxury retail businesses, which includes jewelry and watch brands. Slow economic growth in South Africa has squeezed consumers' pockets. As Starbucks products are more expensive in South Africa than similar items at local chains, the brand is out of reach for many consumers. They are 15 to 25% more expensive than other chains, said Mikhail Treheran, portfolio manager at Westact Asset Management. You come with a premium brand, and that's what people are attracted to. But as soon as your pricing is expensive, you limit yourself to the number of customers who can actually afford it. Those high prices are especially prohibitive in a country like South Africa, where the middle class is small. From 2008 to 2015, about 20% of the population was considered middle class, according to the World Bank. Starbucks Corporation operates 33,000 stores globally, while Starbucks South Africa has grown its portfolio from 16 outlets to 25 outlets in locations including Johannesburg and Cape Town. Rand Capital swooped on Starbucks license towards the end of 2019 when Taste Holdings, the previous holder, lost its appetite for its food business following a disappointing performance. Rand Capital entered the business with growth in mind, saying it is essential to our existence. If we don't get to scale, which Taste was not able to do, then we will be faced with challenges. And that is the reason why Starbucks is struggling to hold a foot in South Africa.
In the US, not much. But in South Africa, they're run by the same parent company, Taste Holdings. And that company is struggling. After opening 12 Starbucks in South Africa, Taste announced in November 2018 that it would stop the rollout of new stores. The company said Starbucks just wasn't making enough money to continue opening new locations. Taste also stopped opening new Domino's, which it said was the biggest underperformer. Even though Taste began opening Starbucks stores again in August 2019, its footprint is still far less than what the company expected when it first entered the market. In 2015, Taste said it saw the potential to open as many as 200 stores there by 2020. Instead, as of 2019, Taste now has just 13 Starbucks locations in South Africa. Taste hasn't had to close any stores, yet. But with its high operating costs and a big price tag most South Africans can't afford, can Starbucks survive in South Africa? Starbucks opened its first location in Seattle in 1971. It quickly became a global brand with 30,000 stores around the world. But Africa is one continent where you won't find many Starbucks. The brand is currently in just 3 African countries: Morocco, Egypt, and South Africa. South Africa is the continent's second largest economy and is now considered a point of entry to the African market for many global brands. When apartheid ended in the 90s, foreign companies returned to the country. South African consumers, who'd long been limited to local players, were curious about these new international brands. Starbucks expands to a new country in one of 2 ways: through Starbucks owned and operated stores, or by partnering with a local company to license stores. In South Africa, Starbucks partnered with Taste Holdings in 2015, giving the company an exclusive 25-year license to open Starbucks stores. When Taste opened its first location in Johannesburg in April 2016, it was the first ever Starbucks in sub-Saharan Africa. Lines of people eager to try its coffee snaked around the block when it first opened in Rosebank, a shopping suburb of Johannesburg. Local media reported that some people even waited overnight for their Frappuccino fix. But soon, customer interest dropped as the novelty of Starbucks wore off. Taste slowed the rate at which it opened new stores. The company reported overall operating losses in the first half of fiscal year 2018. At Taste's food division, net losses mounted, widening 51% from fiscal year 2017 to 2018. Starbucks revenue in South Africa grew, but in August 2018, Taste said it wasn't producing the required return on investments to keep opening new stores. Operating costs were also high for Starbucks in the first 6 months of 2018 due to the addition of 8 new stores. In fiscal year 2019, thanks in part to sales from 2 new stores, Starbucks South Africa revenue increased 46% from the year prior to 108 million rand, or about $7 million. But for the 9 stores that had been open for at least a year, same-store sales declined by 19%. Taste Holdings said the double-digit drop in same-store sales showed that the honeymoon period for Starbucks in South Africa was over. Despite the fact that Starbucks products tend to be more expensive than its rivals in South Africa, it's still ranked number 4 in the specialty coffee market, which is valued at $77.6 million in South Africa. Local coffee companies opened in South Africa long before Starbucks did, and analysts say some chains had already nailed Starbucks' casual European style.
There is an established coffee culture, and it's not so easy just to come in and say, hey, we're the new kids on the block, and we're better. The value proposition, I think of a Starbucks coming to South Africa, 20 years ago would have been very different. But I think, now a Starbucks coming to South Africa, there's definitely a little bit of a so what factor.
Other international coffee chains have tried and failed to expand in South Africa. Northeast favorite Dunkin' Brands opened stores there in 2016. But in February 2019, its licensor said it would close all Dunkin' Donuts and Baskin-Robbins there due to poor performance. Krispy Kreme opened stores in 2015 with a much more modest goal than Starbucks, to open 31 restaurants by 2020. McDonald's expanded to South Africa in 1995. It has 285 restaurants in South Africa, compared to 13 Starbucks. In 2018, McDonald's said it would invest $105 million in South Africa over the next 5 years. Starbucks' biggest problem in South Africa is how expensive its products are.
Starbucks in general, and this is probably where their big problem lies, is they're quite a bit more expensive than all other competition. So on a cappuccino front, they're 15 to 25% more expensive than your other chains that sell arguably just as good coffee or not better. And that's the problem. You come with a premium brand, and that's what people are attracted to. But as soon as your pricing is expensive, you limit yourself to the number of customers who can actually afford it.
Starbucks is aimed at middle and upper class consumers, a segment which is small in South Africa. The World Bank says South Africa has one of the highest inequality rates in the world. From 2008 to 2015, about 20% of the population was considered middle class, which is considerably smaller than in other countries. The average salary in South Africa is about $1,400 a month, or about $17,000 a year.
I'd say probably a price bracket is between like 22 to 35 Rand. I'd say that would be like a safe zone to kind of say that's what most people pay for their coffee. But some things Starbucks are well above that. And so I think that for the majority of people, that's like a great once-off every now and then, but it's not something they're going to purchase every day.
A small latte at Starbucks costs about 60% more than the same item at McDonald's. South African consumers were also strapped for cash when Starbucks started expanding into the country. South Africa entered a recession for the first time since 2009. And the recession didn't just hit consumers. The cost of doing business also went up. Unfavorable exchange rates meant it was more expensive to buy the equipment and supplies needed to run a Starbucks. Taste also blamed higher fuel prices and increased taxes for its poor financial results in the first half of 2018. That meant customers in South Africa weren't spending as much on non-essentials, like upscale coffee. And remember Domino's and Starbucks South Africa connection? Taste Holdings' financial woes were a huge problem for Starbucks. The company's seen big losses and carried high debt, which became clear when shares took a nosedive in 2017. Taste chairman called 2018 one of the most trying and disappointing years in Taste's history. While Starbucks stores are profitable, Taste just couldn't justify the expense of opening any new ones. Taste spent 10 million Rand, or just over $650,000, to open its flagship store in Johannesburg. Analysts say local competitors typically open stores for much less, or just about $100,000 per store. Starbucks has the reputation of being a luxury brand, so customers expected a lot. The cost of perks like free Wi-Fi, lots of beverage options, and large, clean spaces with room to hang out added up. Plenty of coffee chains in South Africa offer similar amenities, but analysts say opening such expensive stores in a short time period put too big of a financial strain on Taste. If another, more stable company had led Starbucks' expansion in South Africa, it may have gone differently.
If Starbucks was part of a bigger group, I don't think we would be having this conversation. There'd be a lot more stores that they would have opened already, and the financing issues wouldn't be hamstringing them in terms of growing the brand.
Taste Holdings refused requests for an interview for this story. Starbucks spokesperson Reggie Borges said in a statement that Starbucks and Taste are optimistic about the brand's opportunity in South Africa. Borges noted that Taste opened its 13th Starbucks in 2019, but that's still a ways off from its full market opportunity of up to 200 stores. There are a lot of forces working against Starbucks in South Africa, but Taste seems confident it can succeed there. Remember those lines around the block when Starbucks first opened? Taste said it recognized Starbucks was in a honeymoon period. Once stores had been open for a year, Taste got a realistic sense of how much consumers would spend at Starbucks. And the numbers didn't look good, with same-store sales dropping 19% in fiscal year 2019. But Taste has a plan to get Starbucks back on track. In 2018, Taste went through a huge executive restructuring. The company appointed new executives with experience operating global brands in South Africa, including a new CEO and COO.
And if anything, the old management team might be blamed for being a bit lax on their spending on new stores. So it would cost them between 5 and 8 million Rand to open a new store, which is about $500,000 per store, which is a lot of money, particularly considering that the competitors were opening stores for about 1.5 to 2 million Rand.
The new leadership team has been open with Starbucks about their financial problems in South Africa. Taste has even gotten positive feedback from Starbucks about its new business model. Taste plans to keep building new stores in South Africa in 2020. It says it will open stores better suited to the local market. That means stores will be smaller and more visible. They'll also be concentrated in 4 major cities: Johannesburg, Pretoria, Durban, and Cape Town. And this time around, Taste will consider drive-through store formats that cater to the country's huge car culture. Competitors have already capitalized on this trend by selling coffee at gas stations or near office complexes. But many of the Starbucks open now are in malls.
But I think there's some things like, for example, not being in a mall. I think that's a great start. So location is important, because at the end of the day, like as a South African, driving to a mall to get coffee is probably not high on the priority list. We drive everywhere. Like to walk somewhere is a very like foreign concept for us. Even if it's close by, it's still a thing of like, you'll drive somewhere.
Taste got a huge cash injection from a multi-million-dollar loan in 2018. But the company says it will need more cash than that to keep opening stores. Taste has said it will open 6 new Starbucks in fiscal year 2020. And in the long term, its goals are still high. It wants to build 200 to 300 Starbucks in South Africa in 10 years.
I done been around the world, ain't nobody else that could do it like us with nobody help. When the chips about to fall and I'm back against the wall, know it's only one place I call. All roads lead home, home, home. Yeah, all roads lead home, home.